All right, today we're going to talk about Apple. But look, we're not just going to talk about the company that makes the phone you're probably holding right now. We're going to put on our investor hats and analyze it for what it truly is, a complex, multi-trillion-dollar investment. And believe me, the story here is a lot more complicated than you might think. So, if you're looking at this as an investor, you have to see that Apple is at this massive crossroads. On one hand, it looks like an unstoppable fortress, right? But on the other, it's a giant under siege from, well, pretty much everywhere. So the real question for us is simple. Which one of these stories is going to win out and define its future? All right, let's get right into it, starting with the bull case. To really get why so many investors are still so bullish on Apple, you've got to understand these powerful interlocking strengths that have made it, well, one of the most dominant companies in the history of the world. Okay, this right here, this is Apple's superpower. It's what they call the ecosystem moat, and it works like a perfectly designed flywheel. Think about it. It all starts when you buy an iPhone. Then you get hooked on the integrated stuff that just works, like iMessage and iCloud. Before you know it, you got the AirPods, maybe an Apple Watch, and at that point, trying to leave, the hassle, the cost of switching everything over, it's just enormous. And what's the result of all that? A mind-blowing 92% iPhone retention rate. Now, for an investor, that's not just brand loyalty. That is the holy grail, predictable, recurring revenue you can practically set your watch to. And that amazing ecosystem we just talked about, it feeds directly into the second huge pillar of the bull case, the services business. Now, yeah, the iPhone is still the king, no doubt. It's over half of all their revenue. But just look at that slice for services. It's already almost a quarter of the entire business, making it the second largest piece of the pie, and, crucially, the fastest growing. And it's all built on this gigantic installed base of over 2.2 billion active devices. Okay, and this slide right here, this is why that pivot to services is such a massive game changer for Apple's bottom line. See, for every dollar they make selling you a piece of hardware, they pocket about 36 cents in gross profit. But for every dollar they make from services, they pocket over 70 cents. It is literally more than twice as profitable. This completely changes Apple's financial DNA. They're not just a cyclical hardware company anymore. They're morphing into a high-margin, recurring revenue platform. And the last piece of the bull case? It's this. A literal fortress built on cash. I mean, look at that number. $133 billion in cash and securities. That gives them a level of financial flexibility that is just almost unheard of. And they don't just sit on it. Sure, it funds R&D, but it also directly rewards shareholders. In fiscal 2024 alone, they used almost $95 billion to buy back their own stock. That is a massive engine that directly pushes value back to investors. Okay, but that fortress we just built up, it's facing a very real, very present danger. So let's flip the script and talk about the bear case, because Apple is dealing with a coordinated attack on multiple fronts, and it's challenging every single one of those strengths we just talked about. The first big problem is actually pretty simple. Growth is slowing down. The global smartphone market, it's pretty much saturated at this point. If you look at the numbers, Apple's year-over-year growth is just 1.5%. Meanwhile, their biggest rival, Samsung, is actually growing faster. What this tells you is that their core business, the iPhone, isn't gaining miles anymore. It's fighting for inches in a very, very crowded field. And you know what? Nowhere is that fight tougher than in China. This isn't just about selling a few less phones in one country. China is a systemic risk for Apple. They're facing intense competition from a resurgent Huawei. So intense that Apple is having to do something they almost never do: cut prices. And get this, Huawei's own operating system, Harmony OS, has now surpassed iOS in market share inside China. That's not just a threat, that's starting to look existential. You pile in all the geopolitical tension and the supply chain risks, and China really becomes Apple's single biggest weak spot. So remember that incredible services engine we were so excited about in the bull case? The one that's supposed to rake in over $100 billion a year? That engine is the heart of the bull case. It's the justification for the stock's high price. Well, that very engine is now the #1 target in the biggest assault Apple has ever faced. There's a global regulatory siege happening right now, and its goal is nothing less than, well, what one analysis calls a direct attack on the profitability of Apple's services segment. The two biggest battlefronts here are the U.S. Department of Justice lawsuit and Europe's new Digital Markets Act, or DMA, and they both want the same thing: to break Apple's gatekeeper control over the App Store. Basically, they want to force Apple to allow other app stores and other payment systems on the iPhone. And if that happens, it directly threatens that sweet 15 to 30% commission that is the bedrock of the App Store's entire business model. Okay, so we've got a powerful fortress on one side and a really serious siege on the other. For an investor, it's all about weighing these two competing stories. And the thing that balances them out? It's the stock's price right now. So the question becomes, what price are we actually paying for all this optimism? And, well, these numbers tell a pretty clear story. Right now, Apple's trading at a price-to-earnings ratio of about 32. That means you're paying a big premium for every dollar of Apple's earnings, compared to its own 10-year average, which is way down at 23. And get this, you're paying more than double the multiple for Apple compared to its main hardware competitor, Samsung. It's expensive. So what does that high price tag really mean? It means the market has already priced in the bull case. That stock price today assumes that Apple is going to successfully navigate this whole regulatory mess, that it's going to fight off Huawei in China, and that the services engine is just going to keep humming along. Simply put, a price that high leaves absolutely no room for error. So, where does all this leave us as investors? Let's try to boil this entire analysis down into a simple, forward-looking dashboard. These are the key things you need to watch to figure out if the bulls or the bears are winning this tug of war. All right, so here it is. This is your watch list. If you want to know who's winning this fight, you've got to keep your eyes glued to these 5 things. First, that's services growth rate. If that number slips out of the double digits, that's a huge red flag. Second, keep tracking their market share in China. It's a live scorecard of the battle against Huawei. Third, watch for any major rulings in those big antitrust cases. A bad ruling could reshape the entire company. And finally, keep an eye on their overall gross margins and, of course, whether the next big iPhone launch can actually get people excited enough for a major upgrade cycle. These are the metrics that'll tell the real story. And that really brings us to the final, crucial question. Look, there's no debate. Apple is a phenomenal company, one of the best ever. But if you're looking at it as an investment today, that's just not enough. The real question is, can it overcome this massive siege to justify the premium price the market is demanding right now? That, right there, is the multi-trillion-dollar question you have to answer for yourself.